Hey guys, welcome back. I hope you had a really great day trading today. So today was Monday, October 21st, and a lot of the ideas that I've been talking about in the past few days played themselves out beautifully today. So I'll get to show you how some of the concepts have played out and how you can use them in the future to take better trades. So starting in SPY today, we did open with a small gap down, and with the first two candles, we closed that gap out and we dropped underneath the 35 EMA. And then we came down, we filled this gap right here. This was from last Friday, Thursday going into Friday, we gapped up. Today we closed that out and we dropped a little bit underneath that. We got to the bottom of the implied move, which was 581, and then we took it just a little bit further down to the bottom of the implied move on Tuesday's contract. So once we got outside of the bottom of the implied move, if you looked to the next day's strike, so this is what I did in SPX, but if you sold 580, 579 bull put spreads, which is you sell 580, you buy 579, then that would have closed up 100% for you when we took that swing back up. And the bottom of the implied moves are levels to look for. You could see we're kind of dangling. It doesn't look like there's any support. Well, the bottom of the implied move is a level. So we swung back up, we got back into the implied move for both days. So realistically here, you could have sold 581, 580 as well. That would have been a winning trade also. But typically I like to look a little bit safer, a little bit further out. And that is a beautiful example of what I've been talking about. So we did bring it back up to the 35 EMA and we closed above that level. And in SPX, same thing over here. We did open down and then we closed that gap within the first hour and then we dropped. We got down, we closed out this gap from last Friday, got to the bottom of the implied move, and then also dropped down to the bottom of the implied move on Tuesday's contract. Today at 11:45, I did post this trade idea and I took the bull put spreads here, 58.20 and 58.10, exactly like I mentioned in last night's video. And that did close up 100% when we swung back into the implied move. So we did close up here also above the 35 EMA. At first you could see it was resistance. We dropped back a little bit and power hour brought us back above the 35 EMA. So SPY closed down 0.16%. SPX closed down 0.18%. And both SPY and SPX did close within the implied move today. We did drop out here in the first half of the day, but we got right back in after hitting the implied move on Tuesday's contract. All right, and then taking it over to QQQ. QQQ did open down, and we did see a pop up off of this gap from last Friday. So we gapped up last Friday. That level was initially support. We popped up, couldn't hold that right here at this resistance level at 496, brought us back down. We got underneath the 35 EMA, dropped down to fill this gap from Friday completely, and right here to the penny, as soon as we filled that gap, we flipped it back around. So the bottom of the implied move was just underneath that as well. So it was two levels that caught us, brought us back up. We got back above the 35 EMA, and you could see that level acted as support in the last hour of the day. So QQQ is the only one that closed green today. We did close up 0.19%. VXN closed up also 0.92%, and we did stay completely within the implied move here. So the takeaway here in QQQ is how when we fill a bull gap, the bottom of the gap can definitely act as a support. I have been mentioning this over and over again lately, and this is just a perfect example of that. And it also helped that we had that 491 bottom of the implied move here on the day as well. So Then let's take it over to IWM. IWM was the underdog today, the biggest loser. And last week, the last 2 weeks actually, this 35 EMA was a very clear and a very strong support. After we gapped up and we got above this long-term resistance at 225, we consolidated back to the 35 EMA and we closed last week right here. And you could see that right here we did have a red signal line on Stupid Willie. And we did see that follow through today. As soon as we broke underneath the 35 EMA, immediately dropped. We closed out this gap. That is a big smack in the face that this did not act as a support. So we dropped outside of the implied move, which was 223. We dropped underneath the bottom of that gap, and we are dangling here. We're not at a support level, but we did hit oversold right here. We have 3 oversold signals, and you could see after that we did go sideways. We still don't have a green signal line. There is definitely more room to go, but we did hit oversold, and we are looking for support. 30-minute 200 moving average is definitely a possibility. We don't have to hit it, but it is definitely on the radar for tomorrow. And another thing I'm seeing, and I almost missed this, is that I had the bottom of the implied move at 222, and we did close at 222.10. And that is because I rounded this. The bottom of the implied move was actually 222.88. And I rounded it down to 222. So if you did sell 222, 221, see it once I added that brought it back down a little bit. So that looks like we closed right within the implied move here as it was rounded out. So if you did sell 222, 221 bull put spreads, this 222 would be down here. Then you did actually close within the implied move. That is one of the big reasons why I do round down. And then on the upside, I always round up. It's just to get a little bit further out, a little bit of a safer strike. All right, and then lastly, let's take it to DIA. Today we did open straight down. We dropped down to the 35 EMA. And remember in last night's video, we did see this bearish divergence right here, which made me think that we would pull away from these all-time highs. Here we did make higher highs, and the strength was supporting it, but here we did see a bearish divergence and we pulled back, and here you can see we did see an oversold signal, and that is where we found some support. So we are officially underneath the 35 EMA. Right here we had only 2 candles print underneath the 35 EMA, and then we did gap up the next day. So 35 EMA is our resistance now in DIA. DIA did close down 0.76%, and we did close within the implied move. And I'm not sure if I did that for IWM, so IWM did close down 1.57%. Pretty solid drop today. RVX closed up 2.03%. And we did close within the implied move on Tuesday's contract, but not on today's. All right, I rambled long enough about today. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Leave me a comment if you have any questions at all. And if you want to buy me a coffee for breaking it down for you each night, there is a thank you button underneath the video, and that is an easy way to show appreciation for all that I do. Alright, so starting in SPY, tomorrow's implied move is between 580 and 587, and that is from options. The 30-day average volatility is lined right up with the implied move on Wednesday's contract, which is 579 to 588. And to the upside, the first level to look for is going to be this resistance level right here. This is at 585, and we did see this level twice, right here and right here before we made all-time highs. So before we made all-time highs and after, we saw 485 as a resistance. Above that, we do have all-time highs, 586.12, and then 587 is the top of the implied move for tomorrow. And 588 is the implied move on Wednesday's contract. And then underneath us, we have the 35 EMA. Power hour did bring us back above that level today, but we did see it as resistance right before. And right now, Stupid Willie is red, and that actually could signal a pullback underneath the 35 EMA. Keep an eye out for that. And if we do break that, then just underneath we do have 580 as the bottom of the implied move. That lines right up with where we saw support today. And then the implied move on Wednesday's contract is 579, and that lines up right here where we saw support last week after we came back in and filled that gap. So right here, 579 is a support, 580 is a support, and then you can see underneath all of that we have the 30-minute 200 moving average and the 1 hour 200 moving average coming in, and the momentum there is strong. So if we do drop, expect to see some technical bounces off of these right here. We're not going to come crashing through a moving average that is pointing up. So to me, that almost looks like it's pointing to support right here between 579 and 578. And 578 is also the bottom of the implied move for Friday's contract, since I did start tracking that. So honestly, a really cool trading range in SPY. SPX, same trading range, different numbers. The implied move over here is between 58.20 and 58.85. That is from options. 30-day average volatility is lined up with the top of the implied move on Wednesday's contract, so 58.10 to 58.95. To the upside, we do have this smaller resistance just underneath all-time highs. So this is at 58.71, so around that however you need to. I'd probably say 58.75, but it is closer to 58.70. And then all-time highs are at 58.78.37. I would round that out to 58.80. And then 58.85 is the top of the implied move for tomorrow. 58.95 is the implied move on Wednesday's contract. And because we have all-time highs right here and the implied move for the next 2 days is above it, I honestly like the look of this spread right here, 58.85, 58.95. And that's probably where I'm going to look to for tomorrow if we do trade up into this area. And then to the downside, 35 EMA is just underneath us, and if we do break that, this gap right here was actually closed out, so ignore this, I just didn't fix that. The bottom of the implied move is 58.20. That's where we saw support today, so that lines right up with that. So then the bottom of the implied move and this right here makes me think that 58.20 will hold as a support tomorrow. Then the bottom of the implied move on Wednesday's contract, 58.10. That lines right up to right here where we saw the bottom of the gap, and when we filled that, that turned into a support. So 58.10 on Wednesday's contract, then we have the 30-minute 200 moving average coming in, and the 1 hour with that stronger momentum under here. And the bottom of the implied move on Friday's contract, 5800. All right, and then QQQ, the implied move over here for tomorrow is between 491 and 499, and that is from options. The 30-day average volatility is still 491 to the downside. It's just rounded. Both the implied move and the 30-day average rounded down to 491, and then 500 And then the implied move on Wednesday's contract, 490 to 501. And let's bring this back in a little bit here to the upside. We are at a little bit of a resistance level right where we closed. So 495.50, if we pop above that, we had a resistance right here, and today we saw that at resistance, so 496.50. If we get above that, then the next level is right at the top of the implied move, 499. So you could see that right here. So then top of the implied move, 499. And then 501 is the top of the implied move on Wednesday's contract. And just a reminder here that we do have Tesla earnings on Wednesday. So that could explain why the implied move is wider than the 30-day average volatility on the next day's contract. And then to the downside, 35 EMA is just underneath us. We did see that as support towards the end of the day. We got back up above that 35 EMA after bouncing on this gap. Again, I didn't shorten this back up, so ignore this. Actually, let me just go ahead and fix that. Okay, so we bounced right here at the bottom of this gap. We got back above the 35 EMA. So this 35 EMA is definitely the first level to look for. Stupid Willie is kind of pointing up here. So 35 EMA could hold tomorrow. And then if we do break it, bottom of the implied move, 491. That does kind of line up right here with this bottom of the gap. And then the bottom of the implied move for tomorrow, this is Wednesday's contract, is 490. This is the day that we have Tesla earnings in after hours. So 30-minute 200 moving average is underneath that. And then just to add another level, we do have support right here at 488, and then bottom of the implied move for Friday's contract from the reading that I did at the beginning of the week was 486. All right, so pretty cool trading range over here for tomorrow as well. IWM, we do have an implied move between 220 and 225. That is also the 30-day average volatility. And then on Wednesday's contract, 219 to 226. So we did have a really big move today to start the week, and that did bring us down all the way down to where we have the bottom of the implied move for the entire week, which is 221. So that is an interesting level. It lines right up with the 30-minute 200 moving average. That could be a support tomorrow. 220, bottom of the implied move for tomorrow, and 219 on Wednesday's contract. We do have the 50-day moving average coming up. That was a support right here last time we saw it. And the 1 hour 200 moving average is also underneath the trading range. So definitely a wild looking one over here. And I didn't do this analysis in order, but in the order that I normally do, but the 35 EMA is above us. Remember, that level can tend to act like a magnet and draw us in. So we are underneath it, so look to that as a resistance if we come up to it. And if we do get above it, the next target is going to be 225. And then the top of the implied move on Wednesday's contract is 226. And remember that 225 level right here, that was that long resistance that we've had for about 3 or 4 months. And we finally gapped up above it, and we could not hold that. We broke down underneath this 35 EMA. So if we swing up, that level could smack us back down. And if we can manage to get above it, then maybe we'll try for another attempt at getting above 225. If we do get up to the top of the trading range here, I would feel pretty comfortable putting on 225, 226 bear call spreads at the top of the trading range. And then lastly, we have DIA. And I don't think I actually finished this trading range. Let me go ahead and do that real fast. There we go. So the implied move for tomorrow is between 424 and 434, and that is from options. And that is a big trading range. And then, of course, the implied move for the entire week is 427 to 438. And to the upside, we have the 35 EMA. Today we did go right underneath that level, so definitely look to that as a possible resistance. This right here is wide. Even though we did hit oversold, we do still have quite a ways to go, or at least room to go more. And if we do manage to get above this level, then the next level to look for is going to be all-time highs. We did make those last Friday, and then we did see that bearish divergence closing out the week, and that is what pulled us back. And then if we get above that, if things get wild, 434 is the top of the implied move, just above all-time highs. And then top of the implied move for the week is 438. And then to the downside, we do have the bottom of the implied move for the week, which is 427. Underneath that, 30-minute 200 moving average. We do have a small support right here that's at 427.5. So that's actually before the 30-minute 200 moving average. And then if we break that, we do have the gap from inflation data this month. And the bottom of that gap lines right up with the bottom of the implied move for tomorrow, which is 424. So definitely looking like some nice bounce points here at the bottom of the implied move for tomorrow. So there you have it, guys. I'm definitely losing my voice tonight. Thankfully, I'm done. Have fun tomorrow. Trade safe. Make sure you take profits when you're up.